Hi, I'm Pat Ballin. I'm talking to Geoff Stein. He's the lead manager of the Fidelity Asset Allocation Private Pool. That was recently launched, Geoff. How is this product different than what you're doing with Canadian asset allocation?
Sure. Well, there are some important differences relative to the Canadian Asset Allocation Fund. The first is that the target investor for the private pool is the high net worth investor. And so what we've structured is a balanced portfolio that has asset allocation characteristics, but specifically geared to some unique needs and preferences of that type of investor. First of all, we're a little bit more conservative in terms of our neutral mix with the private pool relative to the asset allocation fund. The private pool has a neutral of 50% equity, 40% fixed income, 10% cash, as compared to 65, 30, and 5 for the asset allocation fund. Secondly, and very importantly, we are particularly focused in making our tactical asset allocation decisions in this private pool on the concept of downside risk mitigation. That is, we want to make a particular effort to try to protect the downside during periods of volatile markets like we've been through for the last couple years or so. And so what we have here is a set of tactical ranges or bands around the neutral mix that enables us to what we think is the very best job of trying to protect that downside.
Yeah, is capital preservation then is the initiative there?
Certainly capital preservation is an important objective. We want to make money also, so we're looking to generate attractive levels of total return over a full cycle. But because with this fund we're able to go farther underweight risky assets and farther overweight in non-risky assets, one of the primary objectives is to try to smooth that ride out across the market cycle.
How wide are those bands?
So the bands for equities range from 25% to 65%, around a 50% target. And the bands for fixed income also range from 25% to 65%, but around a 40% target. So as I mentioned, we basically have a significant amount of additional ability to go underweight stocks, the risky asset class, and by the same token, a significant amount of ability to go overweight bonds and also cash, the non-risky assets.
Do you have a limit on, for instance, foreign investments or alternative investments within this fund?
We don't have a lot of limits of that nature. Certainly on foreign investments outside of Canada, we have full discretion. The benchmark, the neutral mix, is Canadian only, so we're mindful of that. And certainly wherever we go outside of Canada, there's the potential that we could be taking on currency risk, although we can also hedge that risk. So there will be some sort of informal constraints that we'll put on ourselves, but certainly in terms of the rules that we're operating with, we have a pretty wide range of potential asset classes and percentages that we can go really anywhere globally.
Do you target investment returns as part of the process?
We don't have a specific investment return target. Clearly, we're always going to own some stocks in the portfolio, some bonds, probably even a little bit of cash at most times. So we're going to be dependent to some degree on what the markets have to offer. But certainly over a full market cycle, if we expect that stocks are going to be the highest returning asset class, and from this level of low interest rates, the outlook for bonds over the long term is probably not too significant in terms of return potential. We would hope to be able to generate a return, clearly in the upper single digits, if not higher, again, very dependent on what the market has to offer. I think the key is that we want to try to not lose too much money on the downside, given the focus on risk mitigation.
Geoff, thanks very much.
You're welcome.
Geoff Stein is the lead manager of the Fidelity Asset Allocation Private Pool.